Good morning, everybody. Brian Iverson here with MyCityLender Home Loans for the next 3 weeks, coming to you from 3 of the most beautiful national parks in our country. Here, as always, with Sauer from Greystone Title, and this is your weekly Housing Fast Break. We'll get to the mortgage rates and news in just a minute, but first, here's Shane with a look at housing.
Good morning, Brian, and thank you. 3 quick things for me this week, and I'll try to be brief. These are all great for buyers. All these 3 things. So let's get into it. One is I'm seeing the 90-day average list price in Maricopa County drop for the 5th straight week. This is at the lowest price right now, the lowest average price since the end of March, and it looks like it's still heading down that way. Number 2, our price decrease number has now hit 50%. So 50% of the listings out there are seeing price reductions right now. That is, of course, due to properties sitting a little bit longer, but another great thing for buyers. Lastly, the market is still showing that it is a slight seller's market out there. All my data shows this. However, it's a little misleading because I really think we're in a very balanced market, and I think we're going to kind of see this for the time being, at least for a little bit anyways. This plateaued market, and again, it's a great time for buyers. Brian, how's interest rates? What's happening in your world right now?
Thank you, Shane. As of this morning, the 30-year mortgage rate is at 7.01%, about 10 basis points better than a week ago. After a rocky start to the year, things began to improve for rates in the inflation outlook in May. June took the improvement to the next level, but the past week didn't affect the bigger picture. Ahead of last Wednesday's closure for Juneteenth, the most relevant economic report was retail sales on Tuesday morning. It came in slightly below forecast, and the previous month was revised lower. Rates responded by moving back towards recent lows, but not below them. Some sources suggest mortgage rates are in fact multi-month lows, but this relies on Freddie Mac's survey, which is notorious for modest inconsistencies due to the reality that timing and the methodology of the survey are often inconsistent. In both the 10-year Treasury yields and mortgage rates, the reality has been more of a sideways fizzle as opposed to additional improvement. That's it for this week, guys. If you know where I'm at, go ahead and comment down below, and we'll see you next Tuesday from the next national park on our trip.